Good day traders, this is Stefanos on behalf of Tixee, and in today's video we'll be giving a look back of the market for the week of the 30th of May until the 3rd of June. Now before we dive into the webinar, the key highlights of this week was Hewlett-Packard's slide in the after hours on Thursday after it lowered its full year profit forecast. As always, please note that all of the ideas discussed in this webinar are my own opinions and do not make up for any form of investment, trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products, or instruments, and whether you use any kind of trading strategy. Any information that relates to past performance is not indicative of future results. Now, looking at stocks, as we mentioned, we had Hewlett-Packard, which you can see the chart in front of you right now, and it's on the daily time frame. As we had a sharp sell-off during the after hours on Thursday, and we can pretty much see this from the chart as well. This is Wednesday, and obviously, as we said, it happened in the after hours on that day. So with the open the very next day, we can pretty much see the gap down that the price had. So on this day, we closed around about at $15.80, and then we opened on the very next day more than $1 lower. To be more specific, more than $1.30. Now, the reason for the sharp sell-off is, of course, the supply chain disruptions, as well as the impact of the full exit from the Russian market. While the profit, excluding some items, will be as much as $2.10 in this fiscal year, it's still 7 cents less than the previous guidance that was issued in March. And moreover, to make matters worse, the recent strength that we have seen with the US dollar, given all of the potential rate hikes that are going to be factored into the currency. We have companies like Hewlett-Packard, which of course they also have headquarters in the US, and this is going to hinder other exports if the dollar keeps getting stronger. And also Hewlett-Packard's businesses, like one of the main line of business, is generated through international sales. So as cited by the company's CEO Neri, it's expected to be one more headwind with regards to the company's performance, if of course the dollar keeps on strengthening. Now, to be even more specific with regards to the drop, it was a 6% drop that occurred from Wednesday opening on to Thursday. So yeah, this was one of the biggest movers of the week. Moving on to Forex now. Two of the biggest movers were actually the US dollar Canadian dollar, which I'll pull the chart for now. And the other one was the US dollar Japanese yen. I'll switch it on the weekly because it's going to be a better representation of the sell-off. So you can see actually the US dollar Canadian dollar it's now posting its third consecutive week in decline, which can be a little bit surprising given how we mentioned that the US dollar has been strengthening as of recently. We can pretty much see this from all the following weeks prior to the 3-week decline. But of course, we do have a strengthening Canadian dollar, which for the time being seems like it's overpowering the dollar. The Bank of Canada raised its interest rate by 50 basis points in the past Wednesday, as it was also expected, and they did promise further action to fight inflation, which could potentially signal further rate hikes to come, which is more or less like a similar approach that the US is taking as well. Looking at the US dollar Japanese yen, this one specifically rose. As we said, I mean, we've been having this strengthening US dollar, and we can pretty much see all the consecutive weeks in the green that it had, followed by 3 minor, which was more or less like a correction, consecutive weeks declining. And this week we can again see we're retesting the highs that we posted in all those weeks prior when prices were moving higher. Part of the reason can of course be the fact that the Bank of Japan is expected to maintain its super conservative approach, as it has been doing over the past couple of years with regards to its rate hikes, which is something that they do in order to obviously boost growth. Now the US dollar Canadian that we mentioned earlier, it dropped 1.18% or 150 pips on the week at the time of recording this webinar, while the US dollar Japanese yen rose by 2.14% or 273 pips. Lastly, we're gonna be moving on to oil specifically. Now, oil didn't make any significant moves over the week, but it is worth noting that its overall move over the month of May. So for this one, we're actually gonna switch to the monthly time frame. Since we're in the beginning of June, it's worth mentioning the movement that it made over the course of last month, which is this candlestick right here. Now, overall in May as a whole, it rose by almost 12% or $11.70. With the most probable reasons being for the surge being the fact that we have still the ongoing conflict in Ukraine. And again, something as a reminder during situations where it's obviously unfortunate that we have a war that is currently taking place, not just in Ukraine, but in different parts of the world. But obviously this is something that is considered as a boost for oil prices, seeing as how obviously the fighter jets, in order to fly, they will need they will be affecting energy prices. The same applies for ships if there's like a naval warfare and so on and so forth, which is why we can see mention it as one of the reasons that we've been seeing this consistent uprise in terms of oil prices. Now, the other one also being the fact that the EU mentioned that it was going to actually move forward with a ban on Russian oil imports, which obviously this is something that can tighten supplies, and it can make people, if we're having tightened supplies, then we can also get a heightened demand on the same token. So obviously this is something that boosts oil prices higher, since more and more countries will be looking to tap into their oil reserves, and seeing as how we're going to be having less and less supplies is obviously driving prices higher as well. Now on the technical front, prices are now just $12 away from the high that we can see right up here, which is around about $126, and this was the one that was formed back in March, end of February. And if we want to add some moving averages as well, just to basically look a bit deeper into the technical side. So I'm just going to add, it's going to be a 50 period standard moving average, and we can pretty much see how much higher prices are sitting away from this moving average. We could of course see a retracement, which is going to be a retracement back into the mean, as we basically saw a couple of weeks back right here. So prices were deviating away from the moving averages before they retraced back into it, and then we had that strong surge pretty much ever since. So we could see similar behavior with the prices now. If prices are showing even further strength and we break above this high, then we could potentially see it even pushing higher without even retesting the moving average first. Yeah, there you have it as far as the look back and review for this week. I hope you enjoyed the video and you found it useful, and I'll catch you all in the next one. Until then, trade safe.